Welcome back, my awesome accounting students. Hope you're ready to learn more about job order costing. On the screen, you'll see the agenda for Day 2. Day 2 will be most of a review of what we covered from Day 1, with more in-depth coverage on overhead and tracking the costs of jobs from start to finish. We'll take a look again at how overhead works in a job order costing system. Remember, there's two sides to the overhead account. The debit represents the actual costs. That's where we'll charge the various costs of the indirect items on running the factory. And then on the credit side of the factory overhead account is the applied overhead. And the applied overhead means that the jobs are charging out the overhead based on that predetermined overhead rate. We'll work out a few exercises related to overhead, and then we'll take a look at some more sophisticated job costing transactions, where once again we'll focus using a T account process and we'll track the costs from birth till death. As we work through the problems, we'll refresh our memories on the controlling subsidiary relationships between the inventory accounts that appear for manufacturing entities, as well as the job cards, which will help support the balances in each of the balance sheet accounts. The vast majority of our time today is going to be practicing. You cannot master cost accumulation systems without actually getting your hands dirty. So the majority of our time today will be spent practicing. Remember that your modules link has all of the PowerPoints for the chapter. At our last class lecture, we discussed spending a good 15 to 20 minutes looking at this slide, which represents an overview of how the costs are traced through the system from birth till death. We will be practicing several exercises and problems today to give us practice with doing just that, but this is a great slide to go back and study prior to completing the homework assignment and definitely prior to taking the exam. On this screen, you'll see a summary of the journal entries. As I've proposed to you from the very beginning, with T accounts, a picture is worth 1,000 words. So rather relying on just rote memorization of journal entries, I would encourage you to trace each one of these back to the T accounts. I put this slide in as a nice recap of the various journal entries that the chapter focuses on. In the first couple of journal entries, you'll notice that raw materials basically are comprised of two items. Raw materials coming into the factory, being delivered to the factory, and then raw materials being used in the factory, either in a direct capacity or in an indirect capacity. The next set of journal entries you'll focus on are direct labor costs. We also have been working with overhead, and so the next set of journal entries relates to the overhead. On the left-hand side, or the debit side of the factory overhead, we record actual overhead costs as they are incurred. And on the right side, or credit side of the factory overhead account, we eventually apply overhead to the jobs as they go through the system. Finally, then, you'll watch the transfer of costs going through the balance sheet accounts as progress is made on the job. First, you'll see all the costs going through the WIP account, in one of the three cost categories that are charged to WIP. Then, as the items or jobs are completed, you'll see the cost transferred out of WIP and into finished goods. As the items sit in finished goods, they will await to be sold. And when the goods are finally sold, the costs will move out of finished goods and into cost of goods sold. Remember that when the goods are sold, not only will you have to record that cost flow there, you'll also have to record the revenue from the transaction. Again, this is a great slide to go review prior to your homework and definitely prior to the exam to make sure that you understand where all the various costs are coming from. This schedule of cost of goods manufactured will again come up today. We've worked on this in 2 chapters now. You'll notice, as we've mentioned previously, that the cost of goods manufactured is basically a summary of the WIP account. You will see this same schedule come up multiple times today in the exercises and problems that we go over in class. This is a supporting schedule for the income statement. You may not see it in this slide, but you'll see it in our work today. The cost of goods sold is a summary of the finished goods account, and the debit side of that account will include that cost of manufactured slide that we just finished looking at. In this case, the company has an income statement that shows it's making $600 of profit. And then on the right-hand side, you'll see the nuances of a manufacturing entity that has various inventory accounts now. And in today's lecture, we'll see how those ending balances are supported by various job costing cards. The other thing we'll do today is take another look at the factory overhead account. In chapter 14, the author took a simplistic view, and the way overhead was charged out to WIP was a simple summary of all the debits, and then once we had all the overhead on the debit side, we ended up transferring it all out from factory overhead into WIP. In chapter 15, we learned that it wasn't quite as simple as chapter 14 made it out to be. Instead, we calculated a predetermined rate, and we used that predetermined rate to apply the overhead to WIP as the jobs were making their way through the production process. We learned last time that factory overhead often doesn't have a zero balance. Perfection does not abound in the manufacturing environment. And so today we're going to speak further about what do we do at the end of the year with a debit balance, which represents underapplied overhead that's left over, or a credit balance, which represents overapplied overhead. You'll see that happen in several exercises today. And basically, in this simple survey class of manufacturing accounting, we're going to take the easy way out, and any balance will be charged to cost of goods sold. So we'll practice that today as well. In this example, you'll see that the actual overhead was less than the applied overhead. We call that underapplied. So one thing I would write down in your notes, a debit balance in factory overhead represents underapplied overhead. And in today's lecture, you'll see how we close that out. And just as often as the underapplied overhead happens, so does the overapplied. Once again, we're not perfect. We do expect a balance in that account, and we'll practice getting rid of that balance by charging it to cost of goods sold. The rest of the slides I'll leave for you to look through on your own. our major goal today is to practice, practice, practice. So let's get started. On this first slide, we'll see a job cost sheet for a specific job, job number 56. Read it together with me and then we'll work on completing it. It says the company's predetermined overhead rate is based on direct labor cost. Okay, let's stop. What they've just told us is that predetermined overhead rate, remember we remembered it as bucks over basis. The bucks is going to be the estimated overhead given to us as $747,500. And the basis that the company has chosen in this exercise is direct labor cost, which was $575,000. So the first thing the author asks us to do is compute the predetermined overhead rate. So we'll do a bucks over basis calculation. We'll come up with the overhead percentage, and then we will apply it to this job cost sheet. So scrolling down a bit, we'll notice that this job cost sheet has the 3 product costs listed. In the first set of columns, we see direct materials, which are supported by requisitions. The second set of columns deals with direct labor costs, which are supported by time tickets. And the third category of overhead will be based upon the computation that we did from requirement 1. We'll apply the overhead based on the rate that we come up with in number 1, multiplied by the direct labor cost. To compute requirement 2, simply add up the direct materials, the direct labor, and the overhead charged to the job, and that will give us the total job cost sheet. Pause the video, try this exercise, and we'll go over the answer together. Let's see how you did. Requirement 1 that asks us for the predetermined overhead rate computed to 130% of direct labor cost. We took the bucks over the basis, and when we divided it out, we came up with a rate of 130%. That means that every job that goes through the factory will be given a charge of overhead equal to 130% of whatever the direct labor cost on the job was. The second requirement asked us to compute the factory overhead and to get the total cost of the job in total. You'll notice that from the job card there were 3 direct labor charges, and what we should have done is take the direct labor multiplied by the rate that we computed in requirement number 1. Since there was 700 of direct labor cost on that first time ticket, 130% would result in an overhead charge of 910. The second time ticket was 1,250 multiplied by 130% gave us 1,625 in overhead charges. And the third time ticket was identical to that. That would have given us an additional 1,625. When we add those 3 overhead costs up, we got 4,160. Finally, in computing the total cost of the job, we added up the total direct materials, the total direct labor, the new factory overhead that we just computed, and when those 3 were summed up, we wound up with a total job cost card of $23,000. Okay, how'd you do? If there's anything you missed, go back and see why you missed it. And if you still have questions, you should reach out to your tutor or to myself. Let's move on. This problem will once again take an in-depth look at the factory overhead account. The new part of this problem will be to cover what we do when at the end of the period we have a balance left in the factory overhead. Recall that debits equal actual overhead and credits represent applied overhead. The actual overhead costs accumulate on the debit side, and when overhead is charged out to WIP, we would credit factory overhead. Because we are not perfect, the actual costs rarely equal the applied cost. During the year, we let the balance ride, so to speak. But when the end of the accounting period, probably a year, is up, we have to close out the balance. For ease of understanding, your author has made the decision to just charge out any leftover factory overhead to cost of goods sold. Those of you that are accounting majors and go on to further cost accounting classes, you'll know that there are alternatives and better ways to allocate out any leftover balance. Let's take a look at the problem and we'll go through the answers. So, based on the data the author gave us, the 3 actual factory overhead accounts would have been debited to the overhead, and we would have applied the overhead on the credit side. So in the first example for Star Promotions, there was a credit balance in the factory overhead account. We call this over-applied. Since a credit balance exists and we have to wipe out this factory overhead account, we would do the opposite, which means if it has a credit balance, we would debit factory overhead with the offset going to cost of goods sold. The effect of that journal entry will be to pull down cost of goods sold by $3,000 because there was a small change in the estimate. And on the second company, Valle Builders, when we added up the actual costs and compared it to the applied costs, we had a debit balance of $1,000. This is termed or called underapplied overhead. That means we didn't apply quite enough based on our actual costs. So in this case, because there is a debit balance in factory overhead, we would do the opposite, which means we would make factory overhead go down with the $1,000 credit, and the offset would be a debit to cost of goods sold. That means that we would be increasing our expense because there wasn't quite enough overhead charged out. Once again, in summary, during the period of time, usually month to month to month, we let the balances ride in factory overhead. That means we just carry them over from month to month to month. But when the end of the accounting year comes up, a dummy balance account cannot have a balance in it. So we take a look at either the overapplied or underapplied amounts and simply close them out to cost of goods sold. Let's move on to our next problem. Our next exercise will be a review of the cost accumulation system using job order costing. However, you'll notice that this item has no specific job cards assigned to it, so it'll be a great short general review before we start in with a problem that has multiple different jobs under construction. So read through the problem with me, then we'll set up our starting balances, and I'll give you a chance to compute the answer, and then we'll go over the solution together. So exercise is shown on the screen. You'll notice that it is for a company which produces special order security products. It does use a job order cost system. That job order cost system would be appropriate for any type of entity that does custom or special order systems like this one. The next sentence is going to be key to us. Overhead is applied using a predetermined rate of 70% of direct labor costs. So if I were you, I would go to the credit side of the overhead account and jot down that 70% application rate. The author then gives us some beginning and ending balances for our inventory accounts. Go ahead and drop those in. And then finally gives us the 3 types of product costs that are incurred during the normal manufacturing process. He instructs us to set up the T accounts, to compute the direct materials used, to compute the cost of direct labor, and then further instructs us to set up WIP T accounts, finished good T accounts, and factory overhead T accounts. And so I'm going to move to the next tab, which is our job order costing sheets. And so what I've done is show you the starting balances inserted from the author. So here you'll notice he gave us beginning and ending raw materials. He gave us the fact that the factory payroll was $345,000. He told us that the WIP starting and ending balances were as you see here on the screen, and that the finished good balances were as you see on the screen. So let's go ahead and take a look at the solution. Remember what we're doing in this or any other problem. We are tracking the costs from birth till death. Pause the video, take a moment to read through the instructions, and give it a shot. See if you can compute the costs of the products from beginning till end. One surefire way to make sure that you do the problem correctly is to make sure that by the time you're done, all 3 product costs are indeed charged out to WIP. That would be the direct materials used, which you're asked to calculate, the direct labor charge, which you're also asked to calculate, the factory overhead applied based on the rate he gave us, and the mother of all calculations on most job order and process costing systems is this cost of goods manufactured. Pause the video, give it a shot, and we'll come back and go over the answers together. Okay, let's start with materials. 2 things happen to raw materials. They are purchased and they are used. On the debit side, the author told us how much was purchased. He told us how much of the materials used were indirect. He specifically told us that $15,000 of the materials used were indirect. Okay, so what I would do first is notate in the materials that they went down because 15,000 of materials were charged out to the general factory. The offset on those indirect materials is a charge to factory overhead. Okay, once you have that information, you know that the ending balance was 52,000. So you can compute what you had prior to the direct materials used being computed. That's just a red subtotal there. And the difference between these 2 red numbers would be how to calculate the direct materials used. When direct materials are charged to the factory jobs, they come out of the raw materials and they get charged to work in process. That's how we solve for the material portion of this. On the labor portion, he told us the total factory payroll was $345,000. He also told us that of that amount, $80,000 was due to indirect labor. Indirect labor is charged to overhead. Okay, so we would have debited the factory overhead account. All the labor would have a credit to some type of a wages payable, factory wages payable. But the main thing that we're after here is how much was direct labor. Well, the difference between the total payroll, subtracting out the indirect labor, gave us $265,000 of direct labor. Direct labor is charged to WIP, so that's how we got the debit to our WIP account of $265,000. Finally, that brought us to the overhead account. We had actual overhead accumulating on the debit side, and it would be up to us to apply the overhead of WIP given that 70% rate of direct labor. Okay, well, the author, in addition to the indirect material and the indirect labor charge, told us that there was 120,000 of other factory overhead indirect costs. So that would complete our debit side. Our credit side would be the applied overhead based on 70% of direct labor. You see that calculation taking place right here. And the movement would be a credit to factory overhead and a debit to WIP. Once you see that all three of the product costs have been accumulated in WIP, you're ready to subtotal the WIP T account, shown here with the, I'll make it red, subtotal, 646,700. Since they gave you the ending WIP, the cost of goods manufactured would be the difference between those two red numbers. Just as it was in chapter 14, this is also one of the most important line items of the following chapters, chapters 15 and 16. That's why we invested the time in learning about these T accounts. Once the goods are completed, the cost of goods manufactured are transferred out of WIP and into finished goods. So the next set then would be, or step would be, to subtotal the finished goods. Let me go ahead and make that a red number so it stands out. Let me go ahead and do that while you wait. I'm going to sum it from top to bottom. I got a subtotal of 688,400. Since we had a remaining finished goods balance left of 35,600, the difference between the two must have been transferred out of finished goods into the next account, which would be cost of goods sold. So take a moment to make sure you understand those calculations. When the goods were sold, that is the final resting place for cost of goods sold. And pause the video. Give yourself a chance to review the calculations, and again, ask questions if you have them. To wrap this problem up, we should have foot any T accounts that needed to be footed. The author gave us the balances for raw materials, WIP, and finished goods. Those were given to us. What we needed to do to finish this problem out then is to take a look at the factory overhead balance, and I got 29,500. Okay, so again, pause the videos, check the answers with what you did on your T accounts, and if there's no other questions, we'll go take a look at the journal entries. Let's take a look at the journal entries. Again, all of the calculations were done in the T accounts. If you know how the costs are tracked or traced from birth until death, the journal entries will be a normal result coming out of those T accounts. So let's take a look at the first exercise, which involved the materials. So the first one showed the raw materials purchased, which was a given number. The second one showed the direct materials used, which we calculated. And the third one gives the journal entry for the indirect materials that were charged to the factory. Compare those to a T account. Again, the T account is a picture that's worth 1,000 words. The movement of the various costs from birth to death are captured through the journal entry process. Moving on, the next exercise deals with labor. The first one shows direct labor charged out to the jobs, and the second one shows the indirect labor. You'll notice that both of the credits were to the factory wages payable. It's a normal liability account. Some people want to do this journal entry in one compound entry. That would be fine as well. However, Connect is pretty explicit that they would like 2 journal entries. The third journal entry relates to the overhead. They show the other overhead costs that were incurred. And the last one is the applied overhead, relieving the factory overhead account and charging the 70% of direct labor to the WIP account. Give those items a review, and if you have any questions, go back and review that part of the chapter. Again, the journal entries will be a normal result of you understanding how the T accounts work. Let's move on to our next one. Our last problem of the day is also the most time-consuming. There's many parts to this problem. As you'll notice at the top of the screen, I would strongly encourage you to do a problem like this prior to the exam. The exam problem will not be this lengthy. However, if you can do a problem with 3 different jobs in various stages of production, then the test problem will be a piece of cake for you. Let's read through this together and we'll work through this rather long problem in steps. Once again, we are focusing on the job order cost system. We know that in real life, the costs move through the accounting system based on job cards. On this problem, you will see 3 jobs in various stages of production. In fact, if you look at the bottom of the chart, 1 job was finished and sold. That means its costs will be residing in cost of goods sold at the end of this problem. This second job was finished but unsold. That means by the time we're done with this problem, that will be hanging around in finished goods. And the third job was still in process. That means by the end of this problem, that will be the supporting job card for the WIP account, because WIP means in process, not yet finished. What I would encourage you to do to start this problem off is to look at the T account costing sheet and create 3 separate job cards with the given information on it. Let me go through this given information. 2 out of these 3 jobs were started in a previous month. You'll notice that they came into the month of September with work in process costs from the previous month. So these will be our beginning work in process balances that will help support the beginning WIP account as well as the job cost cards. And then go ahead and enter the job cost that went through the factory in the month of September. I would have 3 distinct line items on each job card, 1 for each of the 3 product costs. So create those job cards with at least 3 lines. Actually, I'm going to add a 4th line. Start off with some beginning WIP. Then the 3 lines that happened during September would be direct materials used, direct labor used, and some overhead applied. It looks like we'll have to calculate that once the author gives us the information. Let me scroll down. I would also start with the raw materials balance as described in letter A here. And while we're at it, go ahead and put those raw materials purchased in, as well as the factory payroll costs. And then you might as well do letter C as well. Get those actual overhead costs on the debit side of the factory overhead with the related credits being charged to these other accounts. Go ahead and notate down that our overhead rate used to charge out overhead to the job cards is going to be 50%. And as we're reading this, let's just make note of letter E. The 1 job that was sold for $380,000 cash. So let's get those worksheets set up and get ready to start the problem. Let me give you a few minutes, pause the video, and work on the first part of that problem by getting the T account set up. On the screen, you'll see the 3 job cards that the author gave us. You'll notice that each job card has a line for beginning WIP for those costs that came to us from the previous month on the jobs that had been started. We have a line item on each card for direct materials, another one for direct labor, and one that we still need to fill in for factory overhead. Factory overhead was given at 50% of the direct labor costs. You can probably eyeball that and do the math by yourself. 50% of 30,000 would be 15,000. 50% of 68,000 would be 34,000. And 50% of 120,000 would be 60,000. Let me grab that overhead and sum it across. And then to get us prepared to move the cost through the system, let me go ahead and sum up the cost from start to finish, drag that across, and the first thing I would encourage you to do is to compare the job card data that you have to those check figures that you see on the screen. This is a fairly long solution, so you may have to pause and rewind the video to make sure that you captured everything. Here are those job cards that we previously took a look at. Taking a look at the right-hand side over here, you'll see that each of these totals support one of the 3 product costs making their way through the balance sheet. So the blue line, direct materials here, showed that the materials charged out to the factory floor, to the WIP account, was 350,000. You'll see that movement as I scroll to the top as coming out of raw materials and going into WIP. The next line of those job cards, the green line here, is showing that 218,000 of direct labor was charged out. You'll see that as a memo item here. We computed it on the job cards, and the labor actually got charged to 2 places. The green direct labor came from the job cards in the amount of 218,000, and the other 14,000 was an indirect labor cost that was given to us in one of the transactions. So this labor account is really just a notation that the entire factory payroll totaled 232,000. Of that amount, 14,000 was charged to labor, and the rest of it was the touch labor, dirty hand labor, was charged to WIP. And that leaves us with overhead. Actual costs, which were given in letter C, were charged out as debits, and the applied overhead was given at the rate of 50% of direct labor. So when we take that 218,000 of green direct labor and apply the overhead rate of 50%, we got 109,000. Now we can take a look at this WIP account. Make sure that you have the same balances that I have. There was 83,000 that came to us from last month. They gave us job cards to support that amount. And then the 3 product costs were all charged to WIP. The materials used, the direct labor, and the factory overhead. You can subtotal that. That subtotaled 760,000. And then they mentioned that 2 jobs were completed. So I'll scroll down to those cost cards so you can see where those numbers came from. Job 114 here totaled 186,000. So that cost was moved out of WIP and into finished goods. And the second job, job number 115 here, was also completed. So it was also moved out of WIP and into finished goods. And if you keep reading in the directions of the problem, One out of those two jobs, job number 114, was sold. When a job is sold, it comes out of finished goods and gets transferred in to cost of goods sold. And along with that would come the recording of the revenue amount. That number was given to you in the data as $380,000 in sales. And then finally, to wrap this problem up, they did tell us that it was the end of the fiscal year, and we need to take a look at the overhead balance. So if we look at that factory overhead account, I subtotaled the amounts here. We had $106,000 in actual overhead, $109,000 in applied overhead. So when I foot that, I get a $3,000 credit balance. A credit balance, the term for that is oversupplied, as you see on the screen. Let me put that in orange. And because it's the end of the year, the author instructs us to close that factory overhead account out. Since closing an account out means to zero it out, since there's a $3,000 credit balance, the way that we would have done that is by debiting factory overhead and crediting cost of goods sold. So let me scroll over to the cost of goods sold account over here. You would see that $3,000 adjustment reducing the cost of goods sold, which is appropriate since the overhead was overcharged. That will show up and that will change your financial statements. So we're now going to take a look at some of the formal financial statements as well as the journal entries. This is a fairly comprehensive problem, so if you have any amounts that are different from mine, pause the video, possibly rewind it, and then make sure you let me know if there's any questions. When we track the cost from birth until death, the journal entries are the normal result that comes out of the T accounts. So take a moment to review these journal entries. Once again, just as in the past, I would encourage you to pause the video and trace each number back to the T accounts. So here we go with requirement or part 3. Letter A deals with the purchase of raw materials. Remember, there's basically two parts to the raw materials. The items coming in are debited to raw materials when they are received at the factory. And then the two things you'll see happening to materials is either being charged to WIP if they are direct materials, or charged to factory overhead if it is an indirect material. Let's take a look at the two journal entries recording the labor costs. Letter C shows the direct labor or dirty hand or touch labor being paid. And letter E shows the indirect labor being paid. Now let's take a look at the various overhead journal entries. Remember that actual overhead is debited to the factory overhead account and applied overhead is credited. Take a moment to review the various factory overhead journal entries. Again, all of these are recorded in the T accounts. Remember that actual overhead is recorded via debits and applied overhead is recorded via a credit. We're talking about the overhead account. Letters D record the indirect materials. Letter E records the indirect labor. And letter G recorded both the factory rent and the factory depreciation. Letter F is where you'll see the overhead applied to the various jobs via a debit to WIP and a credit to factory overhead. Take a moment to review that account and make sure that you understand the charges coming in and then the overhead going out or being relieved. To wrap up the journal entries, take a look at the movement of the costs through the various inventory accounts and eventually into cost of goods sold. Letter H shows the transfer of the 2 jobs completed. Letter I shows the transfer from finished goods into cost of goods sold. Letter J is the related revenue for the sale. In this exercise, it came in cash rather than accounts receivable. And then finally, letter K is the entry to close out the factory overhead. When we looked at the factory overhead account, we saw that there was a $3,000 credit balance, which means the overhead was applied. Since this is the end of the fiscal year, we close that account out by doing the opposite. That means that since there's a credit in factory overhead, we debited the overhead account to close it out, and the offset went to cost of goods sold. That's a new journal entry for us in this chapter. Make sure you take a look at that and compare it with the T account, and make sure you understand what happened in letter K. Part 4 of this problem asked us to prepare a formal schedule of cost of goods manufactured. As we've been practicing now for several chapters, the schedule of cost of goods manufactured is really a summary of the WIP T account. So take a look at the statement, and once again, make sure you understand how this picture of WIP is worth 1,000 words. You'll notice in the schedule that the 3 product costs are listed first: direct materials, direct labor, and factory overhead. The sum of those 3 costs gives you the total manufacturing cost line item, and then the account is tweaked for beginning and ending overhead, resulting in the same 500,000 credit to work in process that we showed in the T accounts through the transfer of the costs of 2 different jobs. Take a moment, make sure that you are prepared to do this schedule on the exam. Part 5 asked us to compute the gross profit from the sale. The sales number was taken from the sales account. The cost of goods sold is taken from the T account shown on the screen. I do want to point out to you that it is the final adjusted cost of goods sold account after the over or under applied inventory was closed out. In this case, the gross profit was $197,000, and those are the first few line items of what the income statement would look like. I would also encourage you to get into the habit of also calculating gross profit as a percentage called the gross profit percentage. The last requirement of the problem asks you the amount of the inventories that would be reported. All of these items can be traced back to the T account worksheet, so I would take a moment to do that now. We wound up with 3 inventory accounts: raw materials of $170,000, which represents the amount of materials on hand at the end of the period; the WIP balance, which represents the job costs of 1 job that still has not been completed, job number 116, and finished goods, which represents the cost of the 1 job, job number 115, that has been completed but remains unsold. Lastly, part 6, which we covered through the T account, is the final answer to the overhead questions. We've spent a lot of time practicing the material over the past 2 days. Now it's up to you to jump in and get your hands dirty and work through the various homework problems. Use the quiz to assess your understanding, as well as the Learn Smart and other assessment tools which have been demonstrated in class. Reach out for assistance if you need it. Professor Johnson, signing out.